Welcome to Trading Lounge and the US indices for Friday, October the 28th. And I want to build a case for a top being in place and looking for short trades. So normally this is the S&P on the daily chart. Now, as a wave 2, we would normally look at a structure that would be called a zigzag, which would be 5 waves for the A wave in the first leg, the B wave in 3, and then 5 waves here in the wave C. So an A and a B and a C wave, and then move down from that point. We don't really have that here. It may, the correction may not be finished, and we could have a leg. The flip side is we could have a leg up here. But the problem here is that the move down through here now has overlapped the top of wave 1 here, which would be this move here. So if we were going to look for this particular structure, the only way it could fit would be having a wave here, a B wave here, and then have a 1, 2, 3, 4, 5 move up here, and that's still possible. However, I just want to be diligent in looking for short trades in the market, just in case we do come down from this point. Now, if we don't come down from this point and there is another push to the upside, what we talk about today is we'll be just going through the same thing again shortly as well. So it'll just be a rinse and a repeat, a bit of a dry run for the short side of the market. So yeah, I mean, a wave 2 normally has 5 waves, 3 waves, and 5 waves. And wave 4 doesn't normally overlap wave 1. Now, it probably hasn't overlapped wave 1 on the actual SPX, the physical market, but it has on the E-minis and the other markets. So maybe that's a case for the long sides in that instance. The other way, I've never really been happy with this as a wave 2 because it's just been too large in relationship to wave 1 here. So it's better off having it look like this. But today I'm going to be just really looking at the bearish side. But the takeaway here is that there can be one more move up because the S&P would, the SPX, the cash market, would not have overlapped the top of wave 1. We could look at that along the way. Now, what are the cases for the upside? This is the E-mini here on the daily chart here. And what I want to point out here, a couple of things, is that firstly, if we looked at this here as the A wave, the B wave, and then 1 and 2, you can see how big wave 2 is. So that's one flag. Then we've got wave 3 up here, and then we've got wave 4 here. Now wave 4 is overlapping the top of wave 1 here now, so that's a bit of a no-no at this degree of structure. We can allow it a little bit in the leveraged derivatives market, but certainly not in the SPX. But the SPX hasn't, if I go to the SPX here, it hasn't overlapped this here. So in this case here, we can look at this being the A wave here, the A wave here, the B wave here, 1, 2, 3, 4, and 5 up here for wave C. So that's all good. We do have increased volume on the downside here. We do have increased volume on this one here going to the upside, which wasn't the case in the E-minis, but the E-minis are normally sort of traded, as a as a tradable product that kind of a bit of a dog on the lead to the S&P. So we can see this move up here, moving up on lower volume. So we've got divergence there, and then these last 2 bars here, we've got increasing volume to the downside. So this increasing volume is is a bit of a catalyst. And when we look at the Vanguard's total stock market, Vanguard's total world stock market index here, we can see that this today's Thursday the 27th. We can see a bit of a short range, but we can see that we've had obviously there's a lot of churning in that, but increased volume and decreasing volume going to the upside here. So that's the divergence between price and volume. So when a trend to be a trend needs increasing volume to be a trend. If it's not getting increased volume, then it's not going to last very long. Anyway, that's just the sort of volume side of it. Let's go back into this chart, and we normally go into start with the 50k, and sometimes that's a waste of time, and sometimes it's okay in its own little way. We don't need all of that, so we'll just bring that into play here. So yeah, I mean, if we looked at this as wave 1 and 2 here, and then 3 here, because we do have 5 waves in here, so we do have that overlap in that case. So it does make a nice ABC at this point. It makes a nice ABC in that the length of wave A here is correlated to roughly the length of waves A and C can have equality in length. But as a wave 2, I kind of ponder the situation because I didn't get a 5-3-5 structure up here. Yeah, I mean, I could kind of squeeze a 5-3-5 structure in here, actually. I could go wave A here, wave B here, wave 1 here, and wave 2 here, and then I can go to wave 3 here and wave 4 here. And because wave 2 was complicated, wave 4 could be simple, and then have 5 waves up at that point. So I can get it to fit at that point, you know, but I feel like I'm forcing it a little bit, and it's something that you know, I take note of, but I'm wary of doing things like that. So one of the things that we talked about yesterday in terms of the bear market was that if the 3,800 was breached, then it would be the first flag to the downside. We talked about it having you know, looking at it as a retested resistance, so to speak, but it has come down quite sharp. So it was a little bit tricky to catch at that point. Now, the second thing that I want to have a look at is that we kind of figured that in this rally to the upside, it would be the, you know, the earnings, you know, and potential earnings of, you know, guided earnings and all that sort of stuff that, you know, that would be coming out at the end of October, and, you know, that could be a catalyst to, you know, weigh the market down and, you know, create that sort of enough weight to, you know, to pull out the bears, because we know that there hasn't been a lot of on the S&P. There's been some volume to come in. We know the NASDAQ is less. We know that the total world stock market move up here is on less volume. Everybody's been a little bit wary of it. So on the downside here, we've seen some big stocks that are pulling the market down. So I just quickly wanted to look at those without going into any explanation, really. So Microsoft is the first one, and it's got the same pattern as the S&P and the NASDAQ, and we can look at this. You know, I could look at this, I got it as an A and a B and a C, but I could look at it as 1 and 2 and 3 and 4 and 5. Now, that there would be arguments about that, but it's doable. It doesn't really matter. It does appear that we're going to be breaching this low here. Well, the main point is from yesterday, it took out the B wave low here, so it's created all this as a corrective pattern. It's confirmed it as a corrective pattern. So now we're looking at down for wave 1 and 2 and 3 and 4 and 5, moving down further. So that's one big stock, right? So that's Microsoft. Then we've got Google here, that has cleanly taken out the bottom here, you know, from its bad news. So the same thing applies again. So we're seeing these big stocks that are going to be pulling the market down. Meta is another one as well, because we're looking at this as the ABC pattern up here. Slightly different count. I won't go into all of that, but you know, boom, down. So that's sort of happening. And then today we've had Amazon do the same thing as well. So with Amazon, we've been looking up as an ABC correction, the same sort of thing as well. But the main point is taken the B wave low out here, and now it's taken this low out here. So yeah, I'm not going to get and talk to all about this at the moment, but just pointing out that these big stocks that we're looking at are pulling the market down. We've also had Apple, is the daily chart for Apple. It's also come down now, and it's made that as a corrective pattern. So we're pretty much on our way down here by the looks of it. Yes, it could be more complicated here. We could have an A wave here, a B wave here, and then a C wave up here for a larger move up here. I've got this as an A and a B here, and 1 and 2, something I still need to work out. Because if I don't get if I didn't get a zigzag in here, then I've got a corrective pattern, which could either be something of a wave, some sort of 1, 2, 3, 4 here and down for 5, and we just have 5 waves down and that's it, or we have a B wave and we look for a larger 5 waves down. So, but in both cases, we're still going down. If it is wave 1 and 2 here, then we will have 3, 4 and 5. If it is a B wave, we'll just have the C wave here, and then that would be the end of it, you know. It's something that we have to work out along the way. It's not a big deal. What all I'm pointing out today is that this move down here now confirms this as a corrective pattern. That means that at some point we're going to make new lows here in Elliott terms. So I do talk forcefully, but I can only talk in Elliott terms. So this is now a corrective pattern, and we will make new lows below here. It's just, will it give us that, you know, will this give us 5 waves down here to make wave 1 here? Because that's what basically we're looking at in the same, we'll be talking about the same thing with the S&P and so on at this point, you know. So even though it's come down, don't worry about the FOMO of it. You can get it again at that point. You know, some of the markets are held up quite well, like the banks. So you could probably look for some short trades in those, because they'll be the last ones to hold up. But the other point that I wanted to make as well is that at TradingLounge we've got this thing called the Bullish Weekly cycle. Now, it's pretty simple. It's a little bit like the weather. If the weather's like this today, then it's probably going to be like that tomorrow in a sense. So if Friday closes weak, then Monday's going to be closing weak as well. Okay, so that means that's kind of helpful, because you get to Friday afternoon, you see the market's weak, and you go, oh, okay, that means Monday's going to probably be weak as well. So that means I could hold over the weekend on my short trades or something like that. Do you know what I mean? So that could be helpful. Now, if we just sort of drill in here, because we want to have a look at a couple of things within this space. So let's just mosey on in and check on that. So this is one of the counts that we had to the upside that we're also looking at. So we had the A wave, the B wave, wave 1 and wave 2. Never happy with wave 2 because it was just so humongous compared to this here. So that just didn't make sense to me. You know, and now when we look at Microsoft, Google and all the rest of it, it's pretty obvious that we need to put wave A here and wave B over here. And we could always count 5 waves up here for the 3rd wave, but we were looking for the 4th wave. And, you know, it's not ruled out. It could still happen. We could still, you know, come up and have a 5th wave here and then roll over like this. So, you know, not to put all your eggs in one basket, so to speak, just be one step at a time. But that's the upside move that we've had. So yeah, but you know, I mean, Google and Microsoft, they've confirmed it that this is the count here. You could probably squeeze a WXY out of it, but I only do that if I really have to. It's that's another story, but it's just my own personal thing. I'm a bit of a diehard Elliott thing, and you know, it's the X wave. That X wave in the middle there is something that Proctor put in, and you know, no disrespect to Proctor. You know, everybody's doing the best they can, and you know, he's led the flag for all us Elliott fans. So that's all good. Everything is good. So yeah, look, what we do need to do now, it has moved through the 38.2% retracement level. Not a lot. We've seen wave 4s come to 50% before, but like I said, it's depending on what platform that you use. This is a CFD product here, but you can see here that we have overlapped at this point. Is that a big issue for leveraged derivative markets? Well, Elliott never used derivatives, you know, to do his Elliott counting. It was just on the Dow and you know, big stocks like Chrysler with no leverage and those sorts of things. So yeah, so we do see a bit of overlap. Like I said, the S&P SPX at the moment hasn't overlapped wave 1 here, so it's still in good shape. So it is possible to push up there. A bit difficult to find an A and a B and a C wave in here. It's a bit sharp for a C wave. I know the NASDAQ stocks have pulled this down, but it's still a bit sharp for a C wave. But still, you know, we can get that reversal at that point. This should be at 3.8 as well there. So I'm just going to remove that. Let's just cruise in a little bit further, just shoot the breeze on a few few points as we sort of go in, not a biggie. So this is kind of what we'd be looking at the moment. So we haven't really made it to our 50-60%, but it's not over until the big lady sings. So, you know, we don't have 5 waves down here yet. That's the other point, you know. We're getting that on Apple, Google, Microsoft and all those sorts of things, but we don't have it here yet. So it's not actually confirmed a bear market. I've got the splash page as being bearish, but that's just to sort of wake us up a little bit. But I'm sure these moves down have woken the bear from hibernation. So yeah, in a nutshell, don't think that you're missing anything, because what we'll be doing over the time ahead, if it's going to be bearish and big bearish down here, we're going to get it, because we'll have 1, 2, 3, 4, 5 here, and then we'll have the ABC pattern. So we'll be focused on this. You know, it's this side over here that we want. If you've got short trades up here, that's good. Be careful about doing, if you're going for the big haul down here, be careful about going short down in this space here. We want this wave 2 over here. So I've got some short positions in this market, but I won't be adding to them until I'm happy to take a small loss. You know, to find the top of the market normally takes 2 or 3 goes. Sure, you could do it in one, but you know, expect the worst and hope for the best. Yeah, so I'll either take a small loss in this situation, or but I won't be adding into this space here. I'll be waiting for this. I'll be waiting for my wave 2 to come back. So I just want to be adding at the tops. We'll talk about that more and more. But to the downside, if we are bearish, this is the 5 wave structure that we're looking at the moment. Okay, so moving in a little bit further. So this is where we were looking at it yesterday on this 2K tick here. So we talked about if it breached the 38, then we need to be, you know, looking at the bearish side. So you may have short positions in here. If that's the case, you'll probably need to have your stops at, you could probably have stops at this point, just above that point. I'm just going to turn that red. When we have a look at the intraday, we'll talk about this a little bit more, just to be sure. So it's probably safer just one more up here, because we've got this as 5 waves here. Well, we'll see this on the 100 tick. So we've got this as 5 waves, and then we've got this as the corrective pattern at this point. So the market should not go at that point. In fact, it shouldn't really go at that point, but we'll get to there. We'll go there in a minute. We'll just have a look at the 1000 ticks here, looking at this to the to the downside. So in a way, it has rallied quite high here, but you know the story. You always get the retest, and that's what we're looking at. This, the market come through level, got market retest level. That's what's happening at the moment. Here it's retesting it, and we talked about that yesterday as well. It's come back off that, but that should be your protection at this level, at this thing here. So what we can see here, we counted 5 waves down here yesterday, but we're looking at that as part of the corrective move. So we've got an A wave, a B wave, and a C wave to this point here. So this leg here, I just don't think that it's finished. I think that it's got something like this to come down. And this is a 50-60% retracement level from this low here to up to here. So that this around the 3700 to 3720 in there, 3730, well, 3700 and group 1, 10, 20, and 30 are going to be in there. But what we're sort of looking for is this ABC pattern here, because what this will be down here is this will be basically wave 1 here, and this will be wave 2. So we also need to think about too that this next leg that comes down, so this, when this comes down back down to here, right, that's also going to have a little ABC pattern coming into play here as well, coming back 61.8% and then going down. So we will be able to look at, because when we talked yesterday, I can't remember what video it was, but the idea was to, you know, add at these tops here, this top, and this top, and there'll be another little top in here. Because when we start getting over here, we'll have the third of the third, and then we'll have another little wave one over here too that we'll be able to navigate as well. And that will give us the third of the third of the third. So this is where this one will come back here, be something like this. So when it comes down into this one, it's going to come down pretty fast at that point, you know. So that 1 and 2 and 1 and 2 and 1 and 2. So if you're trading leverage products, like I'm doing CFDs, other folks will be doing futures contracts, you don't want to be, what I'm saying here is you don't want to be adding, you don't want to sort of get FOMO'd and then start shorting down in these lows here, this one or in this one here as well. Anywhere around the top here will be fine, you know. Even the low of wave B will be okay, but you'll need to take some heat on this one over here. So we want to try to get around these tops here for this, and then we can start shorting the lows at this point. So it's the tops here based on 5 waves here, 5 waves here, 5 waves here. We can add to these tops based on those previous 5 waves, and then when we get over here there won't be many tops, so we'll just be shorting new lows all the way through here and building up positions, because once we get into this third wave down here, I really need to stretch all this out much further, but you get the idea. We want to be able to catch this wave 1 will be what it is, but this wave 3 here will be much bigger. So we're basically building in all in these tops here, and the best thing to do is not over trade as well. Just keep it really small. I just trade really small, and then, you know, just keep feeding the beast, and some of the trades work out, some of them don't, but you end up not getting flicked out. There's nothing worse than seeing the market, let's just assume for a moment that that we're right. We could be right from this top, or we may need to go to another top, and then we have to rinse and repeat and do the whole thing again. But as you know, we don't want to be down at 3,000, because that's kind of where we're heading. We don't want to be down here and you got flicked out up here somewhere because you know, you had too much green in your eyes, you know. So keep it small, and we'll do the journey. Okay, it's enough waffling about all of that, so I'll quickly go through. The NASDAQ has moved down much further because obviously because of the, what's the name, the NASDAQ has always been a little bit weaker. So yeah, I mean, could we look at this as 1, 2, 3, 4 here, and going up for wave 5 and pulling back into a 50-60% and then going up again? Possibly. We're right sort of on that 61.8%, this previous low over here for that. We could look at this as an A wave, a B wave, and a C wave down here, and then we could just go straight up from that point. It's possible because I don't have a 5 wave structure down here just yet. You know, it's not completed. It's probably not the case where we have this as a wave A up here, but I think it's important that we look at both sides and we do everything. You know, I'd have to put the wave B here for this. I could probably squeeze that as an A and a B and 1, 2, 3, 4, and yeah, a little bit dodgy in here, but we'll have a look at that in a moment. But anyway, good to know that we're on support here. Okay, so that 50-60% is right there. That's always one of the first things that you do, because you know that you're going to get some support and bounces and all those sorts of things there. So after I've just said this can be an A, B, C pattern down to this here is the B wave into the 50-60%, I don't think it's the case, because of what we've seen with some of the bigger stocks that have already taken this low out here. You know, we're looking, the leaders have taken this low out and the rest are following, and it'll be a domino effect, so to speak. So that's what we're kind of betting on a little bit. So in counting down here for the NASDAQ, I've got this as 1 and 2 here, and then 1 and 2 and 3, 4, 5 for the third wave, a fourth wave, and 1, 2, 3, 4 here. It has gone up a little bit high, but been sold off as the S&P was retesting the 3.8. So I still need to get 5 waves all the way down here. I still need to get another move down here for this. and then we can start looking at this being wave 1 here, and then an ABC back for wave 2 up at this point. So it will be this side over here that we'll be most interested in, an A and a B and a C wave over here for wave 2. We'll see how far that comes back. We can do the 50-60% and stuff, but at the end of the day, we need to count our structures. So what could happen here in Friday, if Friday is bullish and this pushes up here somewhere, then we know that we've got a little bit of a problem at that point. We could probably push it to having this here to the 61.8% and look at this as 1 and 2 at this point. That could be possible. But the takeaway here is we're not quite ready to short this yet, because I do need to go off those big stocks. You know, that's the thing. So yeah, so those Googles and Microsofts and all those, they'll come down and have their bounce, but they need to sort of finish off at this point. Anyway, that's sort of where we are for the NASDAQ. So we'll be more interested over here for these, okay? And we need to line up the stocks for those as well. So the Russell here has got a good case of moving up further. So with the Russell here, without going too far back here, just looking at this here as wave 1 and 2 here, and 3 here and 4 here, pulling back to the 38.2% retracement level, and the wave 4 of 1 lesser degree. So we talked about this yesterday, and it's pretty much under the, we've got the 1800 here, we've got group 1 above and group 2 below. If group 2 below becomes the resistance, the 1765, then we'll start looking at being bearish here. That would be the logical thing to do at this point. So this market has held up really well. It's had a nice 1, 2, 3, 4, 5 up here for a third wave. We could look at it differently as a W, X and Y to make a B wave up here with an A, B, C here for this. It doesn't look like a very nice, as a bearish move, as a wave 1 here and 2 here. It's possible to have that as a wave 2, but like I said, having this as a wave 2, it's just too, this is too big for this here. So in this case, it does make a nice, ABC pattern here. But you know, the thing is that you know, when you look at some of these stocks like Google here, they have clearly breached the low here. So while these are doing a wave 2 rally here, then markets like this that need to go a little bit higher, and Netflix is one, Enphase is another, there'll be oodles of them. It could probably give us 5 waves here and then roll over from that point. Do you know what I mean? Just sort of being behind the game a little bit. Maybe I could get 5 waves out of here by going 1 and 2 in here and 3, 4, 5, something like that. But then I'm forcing it. I don't particularly like doing that. So anyway, Russell can make new high and look for 5 waves. Because the extension's in wave 3 here means that wave 1 here, whatever the length of that is, and this one here, so it could take you to 840, 850 and then roll over. And the Dow Jones is also holding up quite nicely as well. So I can count this up in a couple of different ways. I won't sort of go into it a bit, but I don't have an impulse wave to the downside. We can still have wave 4 here. So if I just open this up a little bit. So this would be the wave 4 of 1 lesser degree here, that green one over here, right? So if that becomes the retested resistance, then we're probably on our way down at that point. At this stage, it makes a nice little ABC pattern here and could certainly make a new high here to give us this wave 5 over here. The computer's resetting, so I can't use some of the functionality on it while it's resetting. So yeah, we would need to have that level there as the resistance before we can call the top in for this one as well. Okay, I think what we could do at this point though is bring this stop loss here up to that low there for this. So we're just locking that in. Can I move that now? No. Anyway, you can move it up to that point. It's still not going at this point. So anyway, I'll leave it at that. So just we've had long trades in here, taking some off the table here, and we're going to bring that stop up to that point. And this is a market that can also have another high to come in place. I can't drag that wave 5 over here yet, but I wouldn't expect too much to come into play. I could also label it up here as 1, 2, 3, 4, and 5 here for wave C and have a top in here. So we'll just see how it goes. There's no evidence of a top in place for the Dow Jones if I just take it purely by itself. Do you know what I mean? Alrighty, thanks for tuning in. Cheers.